Hello friends, welcome to my channel Sayali Thakur. I hope you all are doing good, happy and healthy. The climate over here, that is in Dombivli, it's become really very awesome. For past 2 days the rain is pouring like anything. But the sad part is that we cannot go out and enjoy the climate. But we are inside our homes for the betterment of everybody. Coronavirus is increasing, the numbers are increasing like anything, especially in the parts where I stay, Kalyan, Dombivli, the number is increasing day by day. But we have to be careful. When we go out, we should be wearing a mask. We should sanitize ourselves whenever we are back at home, maintain the social distancing, and follow the norms told by the government. These all norms, rules, and regulations are for the benefit of ourselves and our loved ones. So I hope you all also are following these norms and you are staying inside your homes. So today I'll be continuing with my topic of rules of accounting, in which earlier we saw what is journal book, what is ledger book, and the trial balance. So now we will move ahead. So let's get started. So today we are going to peep into what is final accounts. You saw journal entry, you saw ledger postings, and then we form a trial balance. With the help of trial balance, final accounts are prepared. So today basically I will give you a overview of the final accounts, especially the trading account, profit and loss account. The final is the balance sheet, which we will take in a separate video because it's a vast. In that video, I will be covering what is balance sheet, how it is prepared, and how one should read a balance sheet of any given organization. So today we will be looking into trading account and profit and loss account. So we will see what is trading account. So basically, when you or when anyone starts a business, he has got certain activity in that business. He can be a manufacturer, he can be a trader, he can be a service provider. So he will be providing services or he will be selling goods according to that. So in trading account, all the expenses, all the incomes regarding or relating to the core business are reflected. Basically, it's the reflection of your core business activities. Whatever your core activity is, the transactions related to your core activities will be reflected in a trading account. So what does a trading account has? It contains all your direct expenses and all your direct income. Now, what is direct income? Direct income is the income which you earn or which you generate from your core business by selling goods, uh, by manufacturing goods and selling goods, by providing services. Direct expenses are those expenses which are related to the business activity. Core business activity means if those expenses are not incurred, you cannot run your business or the business activity will not occur at all. So those kind of expenses will fall under direct expense. Now what all ledgers or what all ledgers which we saw will form or will be part of trading account. So it will depend according to the nature of your business or nature of your enterprise. Like for manufacturing person or an enterprise, the ledgers will be different. The nature of expense will be different. For a trader, there will be different, and for a service provider, there will be different. So you will have to see what is your business and what are your core activities, and according to that you will have to segregate them as direct expenses and direct income, and those will be forming part of the trading account. Now how you will understand? So the ledger which you will decide or ledger which will be falling under direct expense or direct income should be a ledger of a kind which is having a direct income impact on your business. As I said, if those expenses are not incurred, you cannot run the business. So those kind of ledgers and those kind of income ledgers will form the part of trading account. Now we will see how does a trading account looks. Here is an example. On the screen you see a sample trading account which has a debit side, a credit side, particulars column, both in debit and credit side, two amount columns. Then we'll start from the debit side. This is like generally what all comes in a trading account. I have just taken some examples which form the ledgers which form part of trading account. So starting to opening stock, if your organization is into business for some time, so you will definitely have some stock. So for manufacturer, you should understand for manufacturer there will be different type of opening stock because they will have a raw material, they will have some finished good. Also, there can be some stock or some goods which they took or which on which they started some work, but the finished good was not generated. So for that stock we call it as a work in progress stock. For a trader there will be just a stock because he purchases finished goods and he sells as it is. He doesn't do any work on it, so there will be only stock. Second is two purchases. Here all kind of purchases you do in the current year, all the new purchases done will be forming part of two purchases. Less purchase return. Now there can be certain goods which were not up to the mark and you send it back, or the enterprise send it back to the vendor. So that is not your purchase. So you'll have to reduce it from your purchase. So less purchase return. Then comes the direct expenses. Here I have given you few examples which can fall as direct expense. But again, you will have to check what kind of enterprise you are having and what kind of expenses are affecting your core business. So those will form part of direct expenses. Here, first I have taken wages. Wages can be any wages for your laborer, worker who are working in your factory, or laborer who are working in your godowns. So those kind of wages. Then fuel. If you are requiring any fuel to run your machinery, your factory, those kind of expenses will fall under fuel. Freight. Here freight you need to pay on all your purchases because that is required to pay to bring the material, raw material or finished goods, whatever, to your place of business. So that freight, purchase freight you can say. Packing charges will form part of direct expenses. Job work charges, if you're given some work to any other vendor to complete and then give the goods to you, so all the job work charges will form under this. Now we'll move to credit side. Here you will note what sales you have done during the year by sales. Then as you saw in purchase, there were purchase written. Similarly, in sales, there can be sales written. Like the customer to whom you are selling the goods didn't like the good, or there was certain uh, damage or any not up to the mark of your customer and they return back to you. So there will be less sales written. And lastly, buy closing stock. As you saw the opening stock, definitely in this year, after purchasing new goods, after manufacturing new goods and you sell, there can be some goods which are unsold. So again, as we saw in the opening stock, similarly in the closing stock, there will be for manufacturer, it can be the closing stock in the form of raw material, in the form of finished goods, or in the form of work in progress. For a trader, it will be plain closing stock. Now, this trading account shows what income or what you generated from your core activity. So you see to gross profit transferred to profit and loss account. So whatever income you generate, you transfer it to profit and loss account. It can be your gains or it can be your losses. Now we will see the logic of trading account. Like what is the result of trading account? Now as we saw in trading account, we can generate a gross profit. Now how gross profit will come is when your sales are greater than your cost of sales. You will generate a loss, that is a gross loss, if your sales are less than your cost of sales. That means if your sales is more, you will be generating a gross profit. If your sales is less than the cost of sales, you will be generating a loss. So here what is sales? Sales is equal to your sales per se plus your closing stock, because that is your asset. It is ready, which can be used for your sales. So sales plus closing stock. What is your cost of sales? Cost of sales is your opening stock plus your new purchases and plus your direct expenses. So this is the logic. Like you can understand that when will be my gross profit? When my sales and closing stock is more than my direct expenses. I will be generating a loss when my sales is less than my cost of sales. So this will show your earnings or your losses through your core activities. I hope you understand the trading account. Now we will move ahead and we will see what is profit and loss account. As we saw, trading account is the place where you see the core activities of the business. In profit and loss account, you will see what is the actual earning of the enterprise during the year. So trading account reflects the core activities and profit and loss account will show the net impact or what is the earning of your enterprise. It shows all the indirect expenses, also indirect income, which are required to run the business smoothly. It will show the expenses which you incur for your administration purposes. So it gives the net profit or net loss for the organization. When it will occur, like you have the gross profit or gross loss from your trading account, then you show all your expenses you require for your administration, and then it will show what is your net earnings. Also in P&L or profit and loss account, apart from your indirect expenses, there comes into picture the depreciation. The depreciation, which is not your actual expense as such, but you will have to consider depreciation for the assets which are used by you for your business. And provisions. Now, provisions are those expenses which you have incurred but are not due, as in you have benefited out of that expense or you have incurred that expense, but you have not received any bill or invoice from your vendor for payment, but that is due for this year. So there will be provisions, because as we saw in my first video, accrual concept, which says that business is a going concern. So you will have to consider whatever expenses are related to this year. You will have to show it in the books of accounts. Now we will see how a profit and loss account looks. So here is a sample profit and loss account. Here again there is a debit side, credit side, particulars and two amount columns. Now at the start you see in the debit side, you see to gross loss transferred from net profit. In the credit side, by gross profit transferred from trading account. So as we saw in the trading account, we generated gross profit or gross loss, which will be transferred to profit and loss account. Then here we will have all your indirect expenses, starting with to the salaries. Now in your organization, you will be having employees, employees which are not directly working for your core activities but who are handling your administration, your sales, your purchases. So all those people who are forming part of your administration, those people's salary. Then for your business, your employees or the owner has to travel, so all the travel related expenses. Freight on sales, whatever sale you're doing, for that you incur some freight or transport charges, so those will come under this. You have a office for your business, so you have to maintain it, or in case of some people, those offices are on rent, so the rent of office will also come into picture. Then you do some advertising, you do some sales promotion activity for your business. So basically you can understand from the nature of expense which I have given here, these expenses are required for your business. But these are not your core business. Like if you will not have certain administrative people, your business is not going to stop. But these expenses or these people are helping you to have a smooth business, or you can focus more on your business. So each one has a role to play. Then the electricity for your office stationery, also bad debts. Now you face, like you sell the goods to your customer, but certain customer pay you well, certain customers will not pay you, certain customers become bankrupt and that's why they are not able to pay you. So those are your bad debts. That means you will not receive any money from them. So that is a kind of a loss to you. So debit all the losses as per our golden rule logic. So the bad debts also will come and sit in profit and loss account, because those are reducing your gains or they are reducing your income. Now, if suppose you are having some old machinery or old assets which you sell and you incur some losses on those assets, those also will be part of profit and loss account. The insurance for your factory, the insurance for your company, the insurance for your employees, all will come under insurance. Communication charges, it's a age of mobiles, telephones and internet. So all your communication related charges will come under this. Now we will see the credit side. Here you see income from sales commission. Now your core activity is of selling, but you can have other activities which you do apart from your core business. So I have just put one example of sales commission. Also there can be, if you are having certain uh, good cash in your hand, so you keep it as a FD in bank and you generate some interest on those FDs. So that will also come. Now these FDs are of the company. So company was having certain excess cash in hand. So rather than keeping it in cash, we invested in some FDs or mutual funds or whatever kind of investments, and whatever interest you generate from those investments will be your indirect income. As we had a loss on sale of asset, we can also have a profit on sale of assets. So the profit will be sitting in the credit side of the profit, because it's increasing your revenue or it is increasing your gains. So profit on sale of assets will be in credit. Now at the end you see that on the debit side it is to net profit transferred to capital account. So you generated some profits. So it will be at the debit side. Why? Because your credit side is more than your debit side. So the balance amount will be your net profit. So if your credit balance is more than your debit balance, so it will be a net profit. If your debit balance is more than your credit balance, it will be by net loss. So as we saw the logic of trading account, we will see the logic of profit and loss account. Here you see that net profit, how net profit is generated? Net profit is generated by net profit is equal to total earnings is greater than total expenses. So if your earnings are more than your expenses in the business, you will generate a profit. But if your earnings are less than your expenses, you will incur losses. So net profit or net loss. Now, what is your total earnings in this case? Total earnings in this case will be the gross profit which you generated from your trading account plus your indirect incomes. Whatever indirect incomes you generated, that is also your income. Gross profit is also your income because it's generated from your core activity. Total expenses. Now, total expenses are what? Gross loss. As we saw, gross loss, that means your sales was less than your direct expenses. So you generated a loss, which is reducing or which is increasing your expenses and reducing your earnings. So it will be part of total expense. Gross loss plus indirect expenses plus depreciation and plus accruals. That is expenses which are incurred but not due. So this is the logic of P&L account. I hope that this was useful and you understand the concept of trading account, P&L account. So please like my video, please share my video, and also if you have not yet subscribed to my channel, please subscribe to my channel for getting new videos. When you visit my channel, you will see there are currently two sections I have formed. One is for the basic accounting concepts and another is for the current updates. In the basic accounting section, I will be taking a series of videos in which I will be tackling all the topics related to accounting. In current update, I will be taking any current update or current notification in the field of accounting, taxation, audit or laws. So I hope you are enjoying my videos. If you have any query, please put them in the comment section and let me know what are your views, what are your requirements, and how was the current video, and what are your expectations from the videos coming ahead. Also, in this case, like in the tools of accounting, we saw from journal entry, ledger posting, trial balance. So I will be in one of my videos, in next one of my videos, I will be taking an example of an organization. We will have a complete picture of how the journal entries are created, then how they move to different ledgers, and then how based on the trial balance a final accounts is prepared for a company. So that will be a separate complete video. So keep watching my videos and wish you a happy learning. Bye.